What's up, traders? It's Richard here with Lionheart Elite Wave Analysis, back again with another quick dose of wave analysis. So let's do some wave surfing. As per usual, I'm on the dollar index here, and I'm gonna let you guys know about some thoughts that are running through my mind with what's happening with the forex market, cryptocurrencies, some of them. Okay, so without further ado, I'm gonna make an update here on the dollar index because obviously today we have a new Fed chair testifying, right? Jerome Powell. So together with President Trump, they're gonna make America great again. Okay. So let's do some technicals here. Now, obviously, we're in a corrective structure for this minute red 4, and the bottom of the 3 is basically right here on the dollar index, which was basically, let's say, somewhere around 88.40. Yeah, with this 100% fib from within the minuet black 5 for this minute 3. We have from 3 to 4 a 100% Fibonacci extensions, basically finalizing the fifth wave for the bigger 3 for the minute 3 red. And right after that we started a simple ABC correction. And it makes perfect sense for this correction to become a complex structure. And I will actually tell you why. Because we already have in the second wave, when I actually posted this Federal Reserve rate hike. By the way, let's jump on. So basically back then on December 12th, I basically posted this bearish idea on the interest rates hike, and obviously we went dollar index actually started getting trashed, yeah. So right after that, I mean, went down a lot, yeah. So let's say all the way down to 88.47, something like that, and then it started making a corrective structure. Now, um, where I left, where I was basically is we already have a simple ABC correction in this too. Okay, so according to the law of alternation, wave 4 needs to be complex. Yeah, if wave 2 is simple, then wave 4 would be complex and vice versa. Not to mention that should end its correction in the previous in the territory of a previous wave 4 of a lesser degree. And I believe that this is basically the lesser degree, and lesser degree of minute is minuet, which is basically this black 4 right here. So let's basically make an update here. Okay. Now, when this correction actually started unfolding on the upside, I started posting some things. Let me just mute this thing. So we were basically I did this video. Obviously, I'm updating charts. Yeah. So, and then I posted, let's say, a chart that's upcoming rise. And I said, okay, guys, we might have a rise, and I was not. I mean, it didn't go, so it wasn't so bullish, right? So we went on the upside, and we started to going down as per this, exactly how this arrows point out. So the move down wasn't an impulse; it's a fake move. Okay, so this is what I'm seeing, by the way. It's a fake breakout right here because it created a new low, and I believe it's a free wave move, and I'm gonna basically let you guys in on it, and I'm gonna explain to you what I'm actually seeing. So without further ado, I'm gonna explain to you how this structure can actually unfold. Yeah. So let's say if it's a complex structure, which it is. Yeah. My preferred structure would be an expanded flat. More likely, I mean a double flat because this AC turns out to be a W. Yeah. And then we have a WXY for this X with a fake breakout. Yeah. So we have, in other words, AB and then 1, 2, 3, 4, 5, completing basically a one piece, yeah, of the total of 3. And then we have a short-lived upside, which is basically the X. Yeah, this is what the wave X actually does. It's a um, it's an interruption, a temporary interruption of the trend, yeah, of the corrective. So it's a corrective upon a corrective, hence the reason for its fake breakouts and fake moves, false decisions and everything, indecisions basically. So um, what I'm seeing is a W and then X creating a lower low, yeah, giving a divergence right here. Obviously, we had a bearish divergence right here, and I saw this move coming. I also saw this rise coming. Now, the point is that the way this unfolded on the upside, yeah, it's not a proper A, B, C, so we can actually complete this Y in a running flat type of structure. So the running flat is kind of excluded from from the type of structures that it cannot fold. Another structure would be this one. Yeah, let me make it red so that you can actually see. If we would see a triangle, yeah, a running, contracting triangle. Yeah, let me put this on the channel. Um, if we if we do like this, will be A, B, C, D, E with the overflow right here, and then of course we would be unfolding this impulse, bearish impulse for the 5, thus completing basically the minor 5 scale, intermediate, and the primary A. Yeah. So as you know, my thoughts are basically this could be the last swing for the dollar index before a major bullish move on the upside, and that actually coincides with what I'm seeing with the metals, with the FX, let's say with the euro, with euro USD, GBP USD, USD yen, USD Swiss franc. There are some good trades coming, guys. That's what I'm seeing on the charts. Yeah. So by the way. There are free memberships available on the site. Yeah, I'm going to introduce to you guys a reliable broker. You can get the access, the content pass, website access for free. Yeah, so we'll be let you guys know. Also, there's a free course available. So if you guys want to learn, why not? It's a recorded course, and also private courses available as well. But anyway, let's continue. If this would be an A, B, C, D, E, yeah. Well, we would have a problem with the C because it's not a free move. Yeah, it basically looks um, like a leading diagonal for this A. So invalidated. Yeah. The only structure that's left for me is basically leading diagonal in A, zigzag in B. As you can see, I have the flag here. It's a typical flag on the basically lower, basically right underneath this upper channel trend line. Yeah. So I would expect it like this. This is a flag. Yeah. I would expect a breach on the upside right here, and basically to unfold, and we'll see how much this will go. Yeah, if I were to measure this with the actual fibs, if this correction, if this B actually stopped here, we were looking at 61.8, which would be enough because it will basically tag this top. Yeah, so either 61.8 or 100%. Yeah, so that's basically what my thoughts are, which would coincide with the 50%, yeah, of the free. And it'd be normal for wave 4 to be more, let's say, we already almost tagged 38.2, although the reaction on this 38.2 exactly at the 61.8 will be watched. Yeah, so guys, I'm just saying like this. Dollar index, in my view, temporary is bullish. However, my main interest is this, right? That's for sure. So it has more and more importance. This is just basically the final piece, although it can make a difference on the metals because I'm seeing basically let's say the metals, gold and silver. Uh, I'm seeing a temporary vulnerability. Let's say they're quite I mean they look like they're on the edge of a cliff. Let's say, yeah. So they're bearish a bit, yeah, short term. So yeah, we're gonna run out of time very soon. Those are basically my thoughts. I guess I'll see you guys next time. If you have any questions, just message me in private. Yeah. As I always like to say, stay in the green and many pips ahead. Bye for now.